Good evening, guys. It's Saturday, April 29th. My name is Dave Coker, and this is Talking About Finance. All right, here we go. It's another chance to become wealthy, another chance to learn what works and to learn what doesn't work, another chance to get on the road to financial independence. So we ain't got no time to waste. Let's get going. We all want to build wealth, but many don't know. It's impossible to trade. It's impossible to time. It's impossible to chart. These are the three sins, the sins of arrogance that Mr. Market will use to break you. We all know short-term techniques like trading the market, like timing the market, like charting the market simply don't work. In spite of what the scammers, the fraudsters, the confidence tricksters suggest, we all know the one way, the only way to build wealth, to get rich in the markets, is to slowly, consistently, over a long period of time, invest. Don't try to trade. Don't try to market time. Don't look at charts. Just invest. Invest only in dividend-paying assets, in assets that pay you to own them. Invest and collect the cash flow. This money can be reinvested to generate higher cash flow in the next month, the next quarter, the next year. This is what I've been doing for decades. You can do it too. And this evening we're going to talk about finance. The S&P 500 closed the week up about 87 basis points. Four sectors outperformed the S&P 500. Communication services, information technology, real estate, and consumer staples. And seven sectors underperformed, specifically energy, consumer discretionary, materials, financials, healthcare, industrials, and utilities. So all in all, it's not a bad week. We're deep into earnings. And we actually are seeing some good numbers. But we'll have to watch to see how this progresses. Remember, a rough rule of thumb is companies with good news tend to report early. Companies with bad news tend to report late. The VIX traded down to 15.78. It opened the week at 1677. We're not going to say any more this evening about the VIX other than it's weird. I can't help but think it's too damn complacent. I know I've been saying that for about a couple months now. I don't like it. Now, I'm not the only one that's looking at it and saying something odd is going on. So let's give it a little bit more time. I wrote an article, it's on Medium right now, about the VIX, of actually about 3 different VIX indicators. So check that out if you haven't read it. The 10-year note closed the week at 3.42%. It's down 0.1% week on week, down about 4.5% year to date. And we've got an FOMC meeting next week, so watch out. Rumors are we might see 2 rate hikes before Jerome is done. Oil closed the week at 76.63, down about 1.6% on the week, and now down about 4.5% year to date. So yesterday was Friday, and of course I bought Bitcoin. Of course I bought Ripple. It's just what one does on Friday, isn't it? Or am I just weird? Hey, I don't care. I'm going to keep on buying. So now let's take a look at what me and my buddies are talking about all week. We had an excellent week of goss. Oh my gosh, there was so much to talk about. Talking about the markets, talking about the products, talking about the people, and talking about the scandals. Yeah, we love the dirt. We are global Wall Street, and we are absolutely everywhere. On Wall Street and in the city of London and everywhere else that matters. And we all know someone who knows someone or knows someone who knows someone else. Somehow, we can get in touch with people when they're in the news. We talk all week on a private Telegram channel, and I bring the stuff I like to you. So let's go. 7 slides for 7 days. Awesome! So we've talked about gold before, and it seems every time I report to you that central bank purchases are hitting new records, they continue to hit new records. And now we can see, this was an FT, and I thought I'd bring it in again. We can see that we're hitting the highest purchases since 1967. Once again, guys, ask yourself the questions. Why are central banks buying so much gold? Especially over the last 3 quarters or so. It's pretty absolutely incredible. And this is interesting. Of course, Jim Cramer from CNBC we like to joke about him, and it's not really that bad of it, not that far off. He is a contrary indicator. So he's saying it's the end of the banking crisis. Monday might be particularly interesting, especially since we're seeing a lot of short interest in the S&P 500. It's the highest it's been, or the most short, if you want to call it that, since 2011. So roughly 12 years. Yeah, things could happen once people start to get out and really get out in a major way. It'll be interesting to see exactly what goes on here, guys. And here's one. This is really bizarre. Now, this guy, I'm not going to name him. He makes about 190,000 pounds a year, and he has just laughed it off, the inflation and the poor pay scales that many people are suffering through, and just said, you've got to accept being poor. Yeah, it wasn't too popular, to say the least, right? People did not like being advised to just suck it up, which is exactly what he was saying. And this one is quite true, guys. I get the data from Castle Systems every week. And Castle Systems is one of the largest providers of keycard systems to get into office buildings. Guys, nationwide, office occupancy is well under 50%. It's popped up close to 50% a couple times. It's gone up to 52, I think, but now it's below 50%. And areas, for instance, San Jose is roughly 30%. It's amazing. Since the pandemic, people are just not going to the office to work. So yeah, I tend to believe this is not hyperbole, that there is an apocalypse. There's going to be a huge collapse, and we're going to have to watch this. This is really, really interesting. And I'm working on a research piece for my banking clients. I've got all the data, and it's disturbing what's going to happen over the next 18 months. I'll be putting a short form piece up on Medium, so if you're following me on Medium, check that out. That's going to be really interesting. And here's one. This is interesting because I tend to agree with this. Stop buying the dip. Of course, we know there's all these people that try to time. They say, buy the effing dip, blah, blah, blah. Don't do it that way. Just buy. You can't time the markets, guys. Even something as programmatically well-defined and behaved as Bitcoin, you just can't do it. And so at regular intervals, you should be buying Bitcoin. Whether it's weekly, like I do, monthly, quarterly, even annually you could do it, or semi-annually, but just buy regularly. And dollar cost as you build your Bitcoin position. It's simply the way to do it. And this is an interesting one because Elizabeth Warren, who's a fairly powerful senator in the United States, has assembled what she calls an anti-crypto army. And they actually want to criminalize people who own cryptocurrencies in general, crypto wallets, and Bitcoin. It ain't gonna work. It ain't gonna work. This is not 1934 with physical gold. This is a radically different form of money, to use that phrase. You're not going to be able to ban it. The old tricks didn't work. It's better if the U.S. government just gets along with crypto and decentralized finance. Instead, they're putting the cart before the horse. They're going out and they're doing an awful lot of enforcement, fines, sometimes criminal charges. It's not the way to do it, guys. Define the regulatory structure first. And then you can go after and you can enforce regulatory failures. Right now, there's a lot of cases where the government's trying to have their cake and eat it too. They're all over the place. So can they ban Bitcoin? Absolutely not. It just ain't going to happen. Okay, guys, that's it for this evening. Thanks for your time. I hope you have a wonderful week coming up. It's going to be awesome. Excellent trading opportunities, excellent investment opportunities coming up. Of course, in the UK, it's a 3-day, it's a bank holiday weekend, so I'll be watching the fun when New York opens Monday. I've got the dividend money from April all paid in. I got to buy some stocks Monday. I never buy at the open. My preferred time to buy, guys, is actually about 15 minutes before the close, which makes London the best place to trade New York, as I've said many, many times. Take care, guys.